Hello and welcome to an episode of Casual Friday. We are here to gaslight you. It is Saturday, but for the sake of this show, it's Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Don, I made the mistake of watching your Wednesday, actually Friday stream, and all I got from that was infinite bear tarding. All-time high SFP, send it lower. ETH BTC still looks like shit, send it lower. Solana breakout, it's not real, you're imagining things, send it lower. What's going on here? Would you like to explain yourself?
Oh, I mean, I didn't say the last bit. The Solana breakout, I don't think. I mean, I don't remember anyway. But the first bits are all real. I mean, there's some reason to be bad harding, which is the first time I'm saying this. I think generally, like I've been saying, be bullish or less bullish. But now I'm actually saying like I think there's good reasons and good setups to be bad harding for. So.
And
That's
what
just
are
how
they? So
it's
like
looking
on
right now.
BTC, is it really as simple as the all-time high SFP mate? That seems very like European slash British of you, Don, to be
I
making
mean,
that
that's
argument.
this show consists of one European and one British
Yeah,
guy.
for
So
sure, for sure. But I'm using that as a pejorative term, right?
yeah,
Like the
yeah.
current meta meme for those looking back on this episode is that it's become unbelievably popular to dunk on Europeans slash British people
I mean, for
because
good reason.
for
Yeah.
good reasons. And there have been some advocates from that part of the world who are sort of increasingly bearish during the course of this rally, and it's sort of become associated with that part of the world. And so, even though the data doesn't really bear it out necessarily, like a lot of the dumping has come from US sessions and US entities, right?
Yeah.
And a lot of the negative price performance has been US based, but purely culturally, it's like, okay, Europeans are the tick scalper, price action trader beartards, and then the Americans just come online with Michael Saylor and bid. That's at least the law, even though it's not strictly accurate. But in this case, how technical is your argument? How sentiment slash fundamental is your argument? Because look, just to present the case against it in a nutshell, it's essentially that all-time highs on BTC don't tend to be massive reversal inflection points on average, right? In most cases, it ends up in some version of, yes, you get some participants early breakout trading the all-time high before it really sets in. They get shaken out for a week or two or something. You get a bit of a price decline and some jitters, if you will, before the all-time high. But eventually, that's a place where a trend-forming breakout is more likely than a reversal. That's I guess the strongest technical argument against it. So, what do you reckon?
I mean, yeah. I generally don't like to fade all-time high breaks. This one just seems like a decent bet because we had the I would say like one of the best rallies we've ever had in crypto slash in Bitcoin's history. Um, with no pullbacks whatsoever, right? And what that leads to is first, a lot of people are just kind of doubting the rally, all like even at 20 and 30K. Like we had the very telegraphed ETF thing, and people were fading it for a long, long time. Um, so basically, like a lot of people were in disbelief while it was going up. And then what happened is that disbelief switched into this thing can never go down, which we're kind of seeing right now. And so we've gone full circle. We've gone from we cannot go up because of macro to this rally will fail just like every other rally has failed. And now we're basically this rally cannot fail, which I actually agree with. Like I don't think we're gonna make new lows. I don't think we're gonna go even close towards like losing the macro range, which is 35 to 60K. But I think with all of that, kind of like with the positioning that I'm seeing in the market and with the technicals, which I'm guessing we're going to talk about in a second, it's just kind of a good spot. Doesn't have to be this spot for deep pullback, like you never know, right? But I think it's the first time we're actually being bearish seems quite sane to me and seems like a decent trade where I'm like, this would be worth putting money onto if I was actually still shorting. Like, I would actually be quite excited to take a stab
And
at
then
this
here come
thing.
the excuses, right? Oh, I'm European, taxes are so hard, leverage, but let me show you a leverage exchange in the description.
Yes, exactly. No, I just like I mean, especially given I sold like a bunch way earlier for cope reasons. No, because I was like, I'm gonna focus on family and everything else.
No, I
In
preferred
cope.
your first explanation, to be honest. Cope reasons is pretty good. I can see the comments now. It's like, lol, the guy who sold 37K is now
Oh, yeah,
bearish at
always.
60.
Oh,
What a retard.
I've been getting so much of that, and it's quite funny because I've been like bull posting ever since like I sold, and then the ETF hit. We kind of got like a pullback, and then I've been bear posting ever since
You mean
that
bull
pullback.
posting?
Bull posting, yeah,
Ah, the
not bear
Freudian
posting.
slip already, Don. Your mask isn't just coming off; it's been torn off your
Oh
face.
yeah, it's the European in me. I'm like, I cannot say bull, has to be bear.
But this is the
I know,
good
but
thing. We have so many different channels of cope and obfuscation. Like, even if you're bearish and wrong, you can be like, but look, Technical Roundup was bullish, and then Monday Markets was bullish, and we've got like 10 different media arms, like Bankless. You can always find one that was positioned in the right
oh yeah,
direction. So never really wrong.
yeah.
And there's also altcoin cope, right? Remember the altcoin Thursday stream we did, and shit just mega teleported.
Oh
That's
yeah,
amazing
Pepe
cope.
went like 8x.
Oh, that's sickening.
Someone yesterday in the chat was like, "Don, I bought your Pepe call, and I'm up like 8x. Should I
Oh
hold?"
my god. And you
I'm
made
like,
$0 on Pepe,
oh yeah, I
correct?
made
Yeah,
$0
fantastic.
on that. But yeah, that's to say like I've been bullish without being in position, but still like all the comments I get is like, like why would I listen to this guy? Which fair enough. I don't think you should listen to anyone, but just setup wise, I like this one. I think it's actually more likely to not like play out, and there's a little bit of room for a pullback. So I'm not
Okay.
hating on the bears. Obviously, trend still bullish. Everything's still very bullish. Altcoin's been flying. One thing I've been pretty certainly wrong about has been like this Sol. Like I was like, Sol is probably going to be outperformed by ETH. ETH's been dog shit, and Sol's up like whatever, like 30%. So that one seems kind of miss E, as in like quite wrong for now. Yeah, just like I don't have problems with like admitting that if I say something wrong, like for example the Sol, but the Bitcoin thing has been quite accurate, and I think right now seems like a good time to de-risk some.
Yeah, so let's talk about that, right? I
Yeah.
think it raises at least 3 interesting questions from what you've said. The first is that it's based on technicals. The second is that based on market positioning. And the third, there has to be some sort of, not target necessarily, but just to get a sense of the magnitude of pullback where you'd be like, okay, this is enough, or this is close enough to the idea playing out for me to feel correct, right? So if we go from the top, in terms of technical stuff, so we're more or less trading around the all-time high, right? We broke through it and made a new all-time high, and since then, if you look on the daily time frame, for example, we spent 3 or 4 days above it. We're currently below it. On the 4-hour time frame, there's just been a lot of chop and leverage wipe type of stuff that's been going on at that level, and not the response that we've seen historically, right? Like more recently, even on really low time frames, like 4-hour hourly, if you get these V-type wipeouts, they result in new highs pretty quickly. If you get local range retests and SFPs on lower time frames, if you will, or just kind of poking at the extremities, those have resolved pretty quickly. And I think one of the arguments you were making on your fake Wednesday stream was that this is essentially a mirror version of what the bears were getting wrong on the way up, right? So the market would go up, and then it would spike the high, spike the high, spike the high, and basically act as failed breakout bait. And then eventually those failed breakout attempts wouldn't go anywhere, as in they wouldn't go any lower, and you'd get a breakout after all these scary looking spikes and wicks. Would it be correct to characterize a current argument as this is the same thing or the same phenomenon just happening in the opposite direction, i.e. you've got spike, 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 wipe, whatever you want to call it, but instead of doing what it's done in the past, which is one time is enough, that's the gift in itself, and then it rallies, the fact that it keeps going back to the at least low time frame range low without that type of reversal is a sort of shift in behavior or whatever else. And if that's accurate, are there any other technical arguments that you think make your case at least?
Yeah, I have a few, and it's pretty much exactly what you said. And I'll go over that point, and then I'll go over the time frames to kind of make that point more clear.
Sure.
So basically, what you were talking about is lower time frame stuff, which you're kind of seeing on like the 4-hour chart right now, where something that we've been having lately is quite aggressive dips, right? And they've been getting aggressively bought back up, but price hasn't really moved since. So if you look at the price action on the 4th of March, right, where we basically made a high, and then we got that massive sell-off candle that got reclaimed pretty much immediately, and we make new highs, right? That's kind of where this new behavior started, which is massive sell-offs that get reclaimed, and then you make a new high, and you get another massive sell-off that gets reclaimed, you make a new high. That's been kind of like happening, and this is something new, right? Like if you go back, besides the ETF, like the ETF news event, where we had a little bit of volatility, where it kind of did something similar-ish. We didn't really have that before in this entire rally. It's just been like a steady walk up. So something's definitely changed, right? Now I would argue that these sell-offs basically showing that people are not willing to you have a lot more leverage in the system, right? People are just getting wiped the fuck out because they kind of missed the rally, and they're like, fuck it, I'm gonna chase it up with leverage. That's one thing, but also that there's not enough bids, not enough kind of willingness to kind of just prevent this from happening in the first place. You basically get a leverage-induced dump, and then you get a leverage-induced pump back up, because people are like, oh shit, this is where I get my entry. And then it walks up, makes a new high, but then that happens again, right? Because all of these people on leverage, they jump back in, add to their positions, and then get wiped out again, and happens again and again. And that's kind of like moving away from what we had before, which is just like aggressive spot buying rather than aggressive leverage buying. So that's like one thing. And we've been kind of seeing like at least since the last week, that it's been starting to actually aggressively dump, reclaim, but then make new lows, right? So for example, if you look on the 12th of March, we had that dump, got reclaimed, made a new high, but then you started taking out these lows. So on the 14th of March, you took out the 12th of March low on the 4-hour time frame. You bounced, like Bitcoin bounced, but then made immediately a new low, taking out that like previous low again. And it's been happening a little bit like more frequently, and this is something that we haven't really seen this rally yet, where it's actually like just basically SFPing to the downside over and over again. And this is something that is quite a good signal. This is something that I used when we're trading at 20K, where it's like the bears so fucking dumb. Like they're like, oh, SFP, let me short every time. And I was like, this is a sign of strength. Like people are just buying this shit, and then people are jumping in with leverage, trying to short it, and it's just not working, right? And we have the same thing here, just reverse, in my opinion. That's the lower time frame stuff. So that's a little bit of a lower time frame sign of weakness. Doesn't have to mean much when the high time frame stuff is really good, and it has been, but it's starting to turn, in my opinion, a little bit, where like the monthly close last month was at resistance. The all-time high breakout couldn't hold, and then you go on the weekly time frame, you have the same story. All-time high breakout couldn't hold, and it also closed at resistance, which just kind of aids that whole, like, you look at the 4-hour, like, oh, there is actually some unwillingness to buy as aggressively as before, and there's just much more leverage in the system in certain ways, and people are just taking more risks. So I think both of those combined just make for a decent case, right? And if you like, a decent case doesn't mean you're guaranteed to make money on the short. If anything, it's like there's a good chance that you're going to lose money shorting because it's a strong trend. But I think all of that combined makes the case good enough to actually fade this kind of strong trend, at least for once, trying to give the bears a chance. So
it's more of a least retarded place to try type of argument.
Oh yeah, I mean it's the first time that you can actually do it without being an utter retard, right? Because like if you look at the weekly time frame, right, where the fuck would you have shorted this thing? Like I don't think, besides the ETF news, right? Like there was a short setup just based on news. It rallied and then you just slam it, but still that didn't even give you that much of a reward. There wasn't really any place to short it. So now I think there is. we're gonna see how the bears basically do. If they're as helpless as they've been, maybe this all invalidates itself, which would make for a good bullish setup instead. Like when you get a good setup that fails, it's usually a good setup the other way around, right? And something we've talked about quite a bit. Like you get a very bearish setup or very bearish news in the market goes up or sideways. That's usually a good signal for the opposite side of the trade. And I think here it's the same. If this setup fails, that's a very very nice bullish signal. But I tend to kind of trust the setup until it fails rather than expecting it to fail, especially after a rally like this, right? The market went from 15 to 60, 70K in a year, basically. If you're not expecting or not capable to take a pullback, that might be like 10, 20, 30%, because that's what we're talking about, right? Like if this goes low, like where does it go? And I think like the most you can expect, and this is like very, very aggressive, very, very unlikely, would be a 40% pullback. Like I don't think you're going to get anything more than a 40% pullback, and I think that would be a gift that you're not going to get again. And it's kind of hilarious to what prices that would take us, right? Because a 40% pullback would take us to 40, 45K, which is high prices, in at least in comparison to where we've been trading in the last 3 years. So I think it all is like a matter of perspective. People just cannot fathom a pullback of 5 or 10% anymore, which I think is a little bit scary if you're bullish. Like if that's the consensus way of thinking, like we cannot get a 5 or 10 or 15% pullback because of reasons. I think that's a little bit scary. So that's where we at.
Is there anything before 41 to 44K where if it were to pull back there, you would think, okay, the high time frame idea is mostly played out, or this is a good enough rotation, and we've landed in a spot that I could either buy now or close the short, or whichever version of that is appropriate? Because obviously a lot of people will be, if we do pull back, a lot of participants will be looking at that as an opportunity to finally get an entry if they've been locked out, right? So what is the earliest justifiable level, at least in purely technical terms, where you'll think, okay, this isn't like super deep and it's not like insane, but this is good enough, or at least again, you wouldn't feel like a retard buying that downwards rotation?
So there's multiple ways to look at it. I think the high time frame setup that we have right now gives room for that 40% pullback, or like almost 40%. Which is basically like you have a monthly bearish setup ish. It's not too bearish, but it is somewhat bearish. The next support below the one where we're trading right now would be 45K, right? I think if it goes to 45K, like greeting for those last whatever couple percent, so you make it to the 40% number that everyone likes,
Yeah.
I think would be quite stupid. I think 45 is a massive gift already if you get it. So that's the high time frame thing. But I think the way we've been trading, we will not get to 45K just straight up. Like I think that's pretty much impossible. Even if this is a larger kind of pullback, I think what would happen instead is that this high time frame setup that we're in right now plays out in a way where we pull back, we go towards the first support, and I think that's on the weekly time frame, 60K, right? Like 60K is really good support. It's kind of like the round number everyone watches. That's kind of where it felt like we were breaking all-time high already, just because like that's the round number that we broke last time, but then immediately sold off. And then we got back. I think that's the support where you're like, oh yeah, I mean anything below 60K, that's a really nice bounce area. And then if the higher time frame setup actually plays out, that would just mean like you pull back to 60, you bounce, and it could go as high as like 65 or 66 even, like something like that. And then you get the second leg, the more aggressive leg on the pullback, right? So I think in general, if the high time frame setup plays out and it's a high time frame setup, there will be quite sizable bounces along the way. So like people that are holding out, like let's say you're shorting this target 45, there's a good chance that you're going to fumble that position, right? So I think it makes sense to kind of look at it as okay, this is a bearish setup. I'm going to play it to first support, which is 60K. And then I'm going to see if I want to take a re-short like higher up, or if I just want to buy 60K and bet on the bull market continuing, which I think is also not that insane, right? Given the whole narrative that we have, that the ETF is just going to buy everything, assuming that we're going to get a 40% pullback is quite aggressive. So I think just buying 60K, given its support, would be the sanest play, like closing shorts, buying 60, seeing if the bounce is actually decent or if it's not. That would kind of be the smartest way to go about it. I think just mindlessly holding the short can work, but doesn't have to. And mindlessly being out of the market, even though you want to be in it, obviously also not the best play. So yeah, I think there's like a time frame thing here where I think we could go to 45, 50, but also I think we're going to bounce before then quite substantially. So I don't want to make too bold claims and then people are just like the thing is, right, like I'm talking about all of this, and if it actually plays out, people will start listening to me when we're trading at 60K, right? Where they're like, oh, this, like Don was like talking about that this could be like a intermediate top where we pull back a little before we go higher. And he said it could go to 45. We're trading at 60 right now, so let me just short. Like this is exactly how it would play out. That's kind of why I'm trying to make this point quite clear. And there's a good chance it just doesn't pull back and keeps going. So, yeah.
Well, I think no matter how clear you try to make it, Don, we both know you're getting the least charitable interpretation of what you say.
Of course. I mean, that's just
sponsored primarily by me, to be fair, on these shows, but there are others. You did touch on a point that I want to sort of get some clarity on. It's about the overarching theme of the trade itself, which is this more of a, okay, well, this is just a sell and you sell it and fuck off, or is it like this is the dip that you were hoping to get, and then the actual upside of the trade isn't the rotation down, but it's the subsequent rotation higher? Do you know what I mean? Like, obviously, for some altcoins, you're like, okay, this piece of shit has just gone up way too much, and it's at a really bad spot now, and I'm going to sell it, and then when I close my short, I'm not going to think about it again. It's like, oh, when are you rebuying? It's like, what do you mean when am I rebuying? Never is the answer, and that's not uncommon, right? Whereas I think like for BTC and ETH, most of the time there's a sort of larger prevailing bias there. Like, yeah, okay, I'm short to medium term bearish or whatever, but in the grand scheme of things, if I zoom out, I see that as an opportunity to buy, and the more interesting trade is on the other side of that once I establish a position. If we have that spectrum, if you will, or range, where on one hand it's dump it and fuck it, I'm not going to rebuy it, and on the other is, yeah, it's a dip, but the dip is a means to an end, and the end is greater than the short idea itself. Where do you fall between those?
I think the dip could be large enough to just be a really good trade in and on itself. Is that how we say it? Jesus.
In and of itself.
That's what I said.
That's what you said, correct.
Yeah, I think it's a well risk defined. I mean, the thing is, like, it depends on where you took it, right? Because I came back from my vacation. I was like, oh, this is like, I wish I could take this short right now, and we're trading like just barely above 70, right? Like 71-ish or something. And I was like, oh, this is like such a nice kind of trade, because the risk definitely, like, you would have been wrong above 73, right? And taking that trade at 71 point something and having like a stop loss at 73 and targeting 45 on a swing trade basis, like that's just an insane trade to be able to take, right? Like, even if the chance of it playing out is slim, and I don't think it's slim. I've like 245, I think it's quite slim, but like, even if you target 50 or 55, that's like an insane kind of trade to take on a kind of risk level, right? You don't risk that much. It's a tiny percentage of upside that you're gonna lose. The stop is quite close. Target is very far away, right? So I really like that trade just based on that alone. But I kind of like, I am of the opinion that we're gonna make new highs. So it's both. It's one, a really good trade, or was a really good trade. I still think it's a decent one, but we're obviously trading much lower. So take it with a grain of salt. But I also think once we're trading lower at like, or if we trade lower, 45, 50, 55, betting on the upside and betting on like getting to 70, 80, 90K is going to be quite sweet. And so I like the downswing play because it's very risk defined, and I like the upswing because I think there's more in the tank, basically. So both are great, both good reasons.
Having your cake and eating it, of course,
Yeah.
in classic Don fashion.
Kind of feels like it, yeah.
Two final questions on this, and you see, hopefully the Wednesday audience, the fake Wednesday audience, watches this because I'm just prying information out of you for structuring this thing. In terms of, first question is in terms of invalidation, right?
Yeah.
You pointed out that there's just a convenient, basically where the high is, you can cluster that out or do whatever. And so in previous dips, it really didn't take that long for the market to make a new high. And those new high creations tended to be trend forming, or at least be good for a few days and just the price action that follows. Is it the same here, where it's more or less you can even box out the highest closing day or the high itself or whatever and say, if my idea is correct, that's the invalidation. And, you know, if you get a breakout trade through that, those are always tricky. But in the past, that has led to continuation. Is there any other invalidation you feel is appropriate, or is it more the case that the top is in or I'm wrong?
The good thing about this is basically like if you took that trade, the invalidation kind of keeps moving lower. So I think right now, yes, you can box out the highs, you can wait for a close above it, but I also think if the market goes back to 72K, just generally like above 72, 725, that would be kind of like a full-on reclaim of the latest dump, and I think it shouldn't be doing that.
Sure.
So basically that would be now like if someone took that short just based on like the weakness, it's basically break even kind of stop loss right now, which is a meme, right? I'm putting my stop loss break even, but I think there are some arguments for it, especially if it's like so obvious that the trade is wrong if it comes back to your entry, right? Like if you have a good entry, which is basically like an invalidation of itself, like if it comes back, then it makes sense, especially if you're counter trading a really strong trend, right? Because that's essentially what this is. Like it's been moving from 15 to 70K. If you take a short, do you want to really hold it if you're not immediately right? Probably not, right? Because if you're just like, fuck it, I'm going to counter trade this thing like Capo style respectfully, and you're like, I'm short this thing from 50, and then it goes to 60, and then it goes to 70, but you're still convinced that you're right. This is not what you want to do, right? If anything, you want to be looking for these moments where if you're going to be right, you're going to be right really fast with tight invalidation, and then you keep on kind of like adjusting that trade as you see fit along the way. So in this case, the moment, like if this drops right now from 68 to 65, for example, I would, on this trade that I didn't take, like I want to make that clear, like I wish I could. I've been thinking about ways that I could take it, but it's just like, it's too much of a headache. I'm gonna be the guy that tries to buy the dip on the other side of this. Then I would move my stop loss basically one part lower, as in if it comes back above like 70-ish. But obviously, if you do that right now, I think you'd be putting your stop loss quite close to price, which is probably not worth it. Like you also don't necessarily want to, like if you have such a good trade on the risk to reward side of things, like if you mess with it too much and make it too tight, you're just asking to be taken out and asking to be taken out at a bad price on top of all of that, right? So which shouldn't be too aggressive, should still be ready to take a loss if you're wrong, obviously, but also not too lax where you're like, yeah, I might be wrong, but I can feel it in my bones that this is it. It's also really fucking dumb.
The plan remains unchanged, yeah.
Yeah.
No, I think you also raised a really good point about break-even stops and stuff. Most of, at least my critique and the critique on this show as a whole, comes from mechanically, arbitrarily, irrespective of context, putting on a break-even stop as soon as you see a single lick of profit. that is pretty much emotional
Fucking
decision
dumb,
making.
yeah.
It's completely emotional decision making. It's a false sense of security, just a comfort blanket that makes you feel better, but doesn't make for structurally sound trading. Like, especially if you have like an average entry, right? And you can have a reasonable expectation of the market revisiting your entry in a way that doesn't invalidate your whole idea, then break-even stops by definition are self-destructive. So for example, let's say I sold in the middle of resistance, or even the market's moved lower, and I sold that move away from resistance, and then it moves a bit in my favor, I put a stop at break even, then I'm willing to buy resistance at that point if I put that stop there, right? And it works the other way around as well. You know, if I'm short and I put a break even stop, not like at the support or whatever else, if I don't have a great entry, it means I'm willing to to sell support, because that is literally the order type that you have. You know, if you're short, you're buying to close the position. If you're long, you're selling to close the position. And then a lot of the time what you can do, and this is from Tom Dante as well, you could literally just take a blank chart, put your stop loss on the chart and see where it lands with nothing else on it. And a lot of the time, unless you have pristine entries, your break-even stop will end up being in an area where you could quite comfortably buy or sell in the first place, you know, and that's like not a good sign. So yeah, about those mechanical break-even stops, probably not the best idea. Contextually, they can be totally valid if it makes sense within the trade itself, and you're not just doing it for the sake of doing it, you know?
Yeah.
And the idea that the trade becomes risk-free is completely false, right?
Yes.
Like the risk when you put on a break-even stop is that you will get taken out for no good reason without threatening your underlying trade idea. So you're basically just dumping and getting rid of what could be a perfectly valid trade idea for arbitrary reasons. And that's not risk-free, because then imagine you do that several times. The trade ideas that would have made you money if you had judicious trade management end up being scratches or losses, and then you take on your normal amount of losses just through variance or whatever else. Suddenly your P&L curve looks like shit. Like if you don't give your good setups a chance to play out, and moving mechanically and arbitrarily to break even is one damn good way of ensuring that, then that has like a net impact on your equity curve. You just don't give yourself a chance to make money. You know, you're so scared of being wrong, you don't give yourself a chance to make money. That's how I see most break-even stops used, outside of those contexts where it actually makes sense from a structuring the trade point of view.
Yeah, I think generally, if you like put, it very much depends on context. Basically, if you get a gift from the market, right? Let's say the market just kind of teleports down 10K, like we're suddenly trading at 58K on Bitcoin, like, and everyone knows like this is just bullshit. Basically, like you're getting a gift, having like buying that and then having your stop at break even when it bounces. It's not that dumb, because that price should have never been hit in the first place. So if it gets hit again, something's seriously wrong, right? But if you're just like, there's a range or the market is doing something normally-ish and it has a little bit of a dip, and you're like, oh, I'm going to buy that dip because why not? And then you put your stop loss at break even, it's fucking dumb, right? Like it's not like you're owed to never be underwater on your trades. It's
sure.
dumb. But so basically, like if you're getting a gift from the market, like heavily just
mispriced,
they're mispriced. Thank you. Heavily mispriced. I mean, there's a reason why it shouldn't go there again,
Absolutely.
right? Because like if it's mispriced, why the fuck is it trading there again? Like it can do that once, but why is it trading there again? But if it's not the case, if you're just trading normally, and I think that's 90% of normal trading, where you're not buying something that is heavily mispriced, because these heavily mispricing sessions, even though crypto, they happen more often than in other markets, they don't happen that often, then yeah, if that's how you normally trade, it's just wrong. So that's kind of how I look at it anyway. Lucky entries,
likely exits.
Yeah, I'm fucking Salsa spits some good,
that's some good stuff.
Rhymes. Yeah, and I think generally, if you get a lucky entry, there's something to be said about others not getting that lucky entry as well, because then it's not that lucky in the first place, right? And you want to have those lucky entries. But anyway, that's kind of like just spitballing about stops.
No, it's true. It's like, imagine you enter on the point of control, which is by definition like the most traded area within a session or a range, and then you move to break even there.
Like you're going to get stopped out.
Just intuitively, that idea should be offensive, right? Because there's nothing special. Like, if anything, the market's more likely to trade to your stop than not. So you kind of have to consider, how likely is it? Like, what are the implications of the market trading to my stop? And how likely is it to trade to my stop? And you want the answer to the first one to be, well, my idea is overwhelmingly likely to be wrong if it trades at my stop. And for the second one is it's sort of very unlikely to do that. Then you could, I think, justify like moving to break even, or even agree on the other side of that, managing the trade more aggressively, right? But if you've kind of entered in the middle of nowhere, or your entry is a bit shit, or you're a bit chasey, and then you do the same two-part test, like what is the what is the implication to the trade idea if the market trades at where I've put that order? And if the answer is fuck all, that's a bad sign. And then if the answer for the second one is how likely is it? It's like, well, I don't know, it's pretty likely, or it's not unlikely at least. Then what are you doing exiting the trade at that point? This is, again, to quote Capo, nothing has changed in that instance. And so your trade management shouldn't be that aggressive when you have no good reason to intervene in the trade in the first place. That's really what it comes down to, right? Like, do I have a good reason to mess with this thing? If you have an absolute gift of an entry and the market really shouldn't go back there and it's a structurally sound trade and you don't get many of those entries full stop, then you've got no business touching that thing. And only if it goes back there, then that actually has quite significant ramifications. But if you're sort of more or less, chasing a little bit, entering near the point of control, you've got wider parameters, it's not as precise, then by definition, you can't be as precise in your own trade management. It's almost hubris and arrogance. It's like, now I have taken a trade and therefore the market can never put me underwater again. It's like, who the fuck are you, right? Like, the market just really is agnostic to these types of things. Nothing special about whether your P&L is red or green in the vast majority of cases, especially if it's kind of just trading either side of it. Anyway, final question about Don's Big Short, which is obviously the title of this video.
It's great because I'm not even taking it.
That said, Don, how are you any different from Capo? So you're here bear tarding, and then when people are going to call you out, you'll say, well, actually, I wasn't short in the first place. You two seem to have a lot in common just on those grounds. What do you say to that?
I mean, I think that's valid criticism.
I think so too.
I'm here being like, oh, but then again, you're kind of asking me for my opinion,
I am,
like what else am I gonna say, like
the armchair shorter speaks for an hour about his trade idea and doesn't fucking take it. I thought that was my job, man. What are you doing? You're gonna take away the one thing I have.
I've actually been legit getting the itch again, because I've been kind of making sure that generally it's just a headache, so I just don't do it. But this one, when prices go quite crazy, it's kind of the itch comes back. But I think generally shorting is overrated quite a bit. The possible kind of P&L that you can make is much smaller than if you're just taking the long side of a different trade. Pip is up 8x, and you're talking about shorting Bitcoin down 10-15%. I mean, what the fuck are you even doing, right?
Yes, agreed.
So I think generally shorting is, even though the setups I quite like just from a trading perspective, I quite like it. It's quite clean. It's just fun. But reward-wise, I think it's something that most people just shouldn't be doing, right? But yeah, I take it as valid criticism. I'm just imagine me bear tarding but not talking about shorting, because like I said, I'm not taking the trade.
So you bull tard Pepe, it goes up, you don't make any money. You're going to bear tard BTC if it goes down, won't make any money either. And all of that to say, you have to use our ref link, because clearly that's the only income source between us two, Don.
Oh yeah, I mean,
me and my OnlyFans as well, but I haven't shared that to crypto Twitter yet. I mean, I don't need to. You can imagine how popular that is.
Oh yeah, I mean...
Nice to keep those lives separate. The final question, I mean it for real this time. Not that the OnlyFans part isn't real. I mean, pussy in bio. So some people might be listening to this and they might take it, for example, as a take profit signal, right? Instead of okay, well, shorting's down, maybe I don't take it, but if I'm overextended, maybe I'll consider this. And certainly don't do anything because the show told you to, because we didn't tell you to do anything in the first place. No. It's two sort of friends, mostly co-hosts, talking into their microphone. It's not financial advice, obviously. It's just shooting the shit, really, between two friends. That said, if someone voluntarily, independent of what we may or may not have said, chooses to take profit, that's pretty innocent for the most part, as long as you don't become paralyzed and can rebuy if you're wrong, type of thing. Alternatively, someone might be a bit more mischievous and think, okay, well, if this guy is bear tarding and think BTC is going to go down to at least 60, maybe all the way down to 50 and whatever, then surely altcoins will materially reprice from that point of view. So even though he's an armchair European boomer who can't short, if I really want to juice the big moves, it works both ways, right? Like we've seen a lot of behavior where people are bullish BTC or ETH or whatever else, and they'll just send it into altcoins, and there have been tons of opportunities there. Presumably it works the other way around as well, that if you think that the market's going to actually go down for more than one day in a row on BTC, that there may be opportunities to take that market effect and express it through altcoins, which are presumably more volatile and will move more. Do you think that's a valid expression of the trade idea? And if so, do you think, how would you pick those altcoins essentially?
I mean, it is a valid kind of way to think about this, especially given, I mean, if you just look back to the last few times where we had like a 5 to 10% down day on Bitcoin, altcoins have been doing absolutely piss poor, right? Like they've got completely and utterly wrecked. So, and that's all been fake moves, right? That's all been washouts basically. So imagine if we actually get a real move that is a little bit bigger to the downside, people are going to shit their pants and it's going to be blood everywhere, right? The kind of problem that you have in taking that is that if you're wrong and Bitcoin goes up, there's a good chance that these altcoins are just gonna reprice just to the upside, so you get doubly fucked, right? So it's just taking more risk for more reward, but yeah, I don't think that's necessarily dumb, and I think picking them is basically you just choose the ones that have large positioning going on. You can do that by OI relative to market cap, whatever. Like there's a few ways to do it. To like pick them out, the ones that are hot, the ones that people are talking about on Twitter, the ones that people have leveraged position in, right? Like those would be the ones that go up and down the most, the ones that have most volume, essentially. So that would be one way to do it. But I'm not saying anyone should be shorting or longing altcoins. I'm just saying like there's a Bitcoin short setup. So, but yeah, I think there's different ways to kind of pick the coins. Maybe you pick the one that you fucking hate. Maybe you.
That's a great trading strategy.
Maybe you take the one that the influencers are shilling on Twitter and non-stop. Sure. Just like the thing is with the high volume coins, right? Like let's say you actually do this. You're like, okay, I think Bitcoin's gonna pull back. I'm gonna short an altcoin. The high volume coins, they're gonna move to the downside the most, more likely than not. But they're also going to bounce the fastest, right? So you have to be quite nimble on this front, like something we've been seeing generally. Solana, for example, like it dumps and then it recovers like 10, 15, 20% in the next 2, 3, 4 hours. And you're kind of sitting there, you had massive P&L and now you have none. So if you're trading the light coins, the ones that are shilled everywhere, you have to expect the dips to be bought aggressively if they reprice. So.
Yeah, I think that's useful. In my head, at least, taking action on those types of trade ideas, and it works both ways. But for this instance, basket one would be exactly as you described, the ones where you expect more volatility. But the downside of that is, if it bounces, it's sort of going to rip your face off unless you manage the trade properly. And in those instances, I would look at stuff with consistently high funding rates over the last 1, 3, 7 days, ideally mixed with large increases in open interest also over the last 1, 3, 7 days. And ideally, both of those things being close to when you're taking your BTC idea, right? So you want a lot of like the skew of that open interest to be like as close to the high / as fresh as possible, because those are going to be the more vulnerable positions, in my view at least. And then basket two is slightly more conservative, where it's not the hot coins, high open interest, actively traded ones. You just pick something that's been kind of shitty the whole time and is going to just get battered by the correlation. And then the chances of that, maybe the volatility on that one is going to be lower, but then the chances of it ripping your face off in a bounce is also lower, right? Because the bounce is going to be shittier. So I think it's kind of pick your poison.
You could have just said Litecoin.
I could have just said Litecoin, yeah. We always seem to converge back to Litecoin on this show. But I feel like that's at least a semi-useful framework. It's like you can pick the higher vol stuff. Upside, higher vol, downside will rip your face off if you're wrong and bounce quicker if you mismanage. Basket two is the less popular, lower vol stuff. Upside is that it won't rip your face off in a bounce, release is less likely to. And then the downside, of course, is that maybe you'll get a smaller move and it'll just be mostly dragged down by correlations versus liquidations and forced sellers and so on and so forth. So Nice. Okay. The Big Short. Got it done. Thank you. Give me just 2 minutes. I need to enter with my 0.1 BTC total portfolio 10x.
Wow.
ETH BTC. Are you tired
Yeah.
of talking about this thing yet? I'm getting
I
there.
am, yeah. I mean, it's shit. I think, and the funny thing is, like, I've been saying, like, I think ETH BTC is going to outperform a lot. But the reason why I'm saying it is because I think the other ones are not going to do so well. And if they don't do so well, I think ETH might be the best of shit. Basically, I think ETH is only ever going to outperform if everything else is doing shit, which is not the best for ETH holders, right? Because the shining moment of glory should not be one where you're swimming in shit. But for ETH holders, I think that might be the case.
So ETH BTC up on market being down type of thing.
Oh, I think ETH BTC better than Litecoin BTC
Oh,
or
I
like
see. Okay.
a lot of
So
other
out of the alt
altcoins.
BTC pairs, you think ETH
Yes.
is
So
okay?
basically, no, and I also think like if the market goes down, right? If I'm right on the market going down, I think ETH BTC might not go down that much, but I think a lot of the other altcoins might go down 10, 20, 30, 40, 50%. And then you're going to be wishing you were sitting in ETH BTC or like in ETH, but the people in ETH might be wishing that they're sitting in USD. You know what I mean?
Oh,
Like
sure,
that kind
sure.
of deal. So where
Like
no
you
one
trade
really makes
NFTs
money.
essentially. It's that experience.
Yeah, exactly. Where you're like, fuck, I just wanna be in the asset that is not nuking as much, and that the people that are sitting in that one are just like, fuck it, why do I hold this shit? I just want to be in USD. That's kind of like where I think ETH could do the best, which is shit, right? Like that's just shit. But that's kind of where my head's at on that front. I think ETH BTC is probably gonna continue to be not so great. But like I said, if we get a pullback, I think it's going to be just most solid one, which doesn't really help. But that's kind of where I think it is.
Understood. Now, again, on the altcoin front, someone might be listening and say, look, I'm not good at shorting. I don't like shorting. I agree with the previous shows of Technical Roundup where the upside on being long and right is just mathematically superior.
Oh yeah, just generally,
yeah, just let's just say we're in those conditions, or for mathematical reasons, or trading preferences, or whatever. And like, even if the duck is correct, I'll begrudgingly, at least mentally, prepare for that. But instead of buying the BTC dip and instead of shorting altcoins into it, I'm going to ignore that side of the leg and instead look to scoop things up on a larger pullback. And obviously people are going to target altcoins for that purpose.
yeah.
Do you have any either on your watch list, or how you would sort of pass through those or categorize them if we get multiple days of downside or whatever that looks like, and multiple 10-20% type of days type of thing, where it's not just a flush and go, but like something scarier looking on the higher time frames? How would you pick your alts? Is it the same process, just inverted? Or is it stuff that's been strong? Does anything change?
No, it's pretty much the exact same process. You basically, like, I would want to buy the ones that had high volume, high or I very liked, if they nuke a lot, right? For example, let's say Solana has a really bad day or bad 3 days, because a bunch of people are sitting on this with leverage. And if the market wipes out, that's going to wipe out too. Solana would be a very nice short-term pick, right? Where you're like, that's going to bounce a shitload, especially if it goes deep. And you don't ever know how deep it might go on those kind of instances.
That's what she
But
said.
but if it does discount heavily, you buy that discount, it bounces 20-30%, and then you're golden. It's a really good trade. For the longer term trades, right? Like, I mean, if I'm correct in my thinking and my setup that I think it might play out, and it's a big if, then I'm just gonna pick the ones that I'm currently interested in. I think ETH is interesting narrative wise, so I'm gonna pick some ETH up. I think Solana I would trade short term, but not anything beyond that. I think it's I like the whole narrative seems a little bit heated. I would rather be getting in on the ETH trade cheaply if I can. I think that's quite the safe trade. Might not get as much yield as the Solana one, but it seems quite safe if you get it discounted, right? And then Dogecoin seems quite nice just based on the fact that it's the meme coin, like the OG meme coin. I think it's going to be doing much less well than other meme coins will. but also you're not going to get rug pulled. It's pretty safe bet, and I kind of like those. Nice to just buy something. It goes up 2, 3, 4x, very liquid, very easy, very slow, both to the up and downside. Like I don't hate on that. And then other coins basically that I find interesting. And
Whiff and Pepe, obviously. I've said it for you.
Obviously. No, I think both of those trades have also played. Like Pepe, I think it's gonna do well generally, but that trade has played out like in the sense that it's now like if it doesn't massively discount, I wouldn't want to be buying that. So if it goes down 50% based on some bullshit, you might see me buy Pepe and just trade it. And then I might even swing it, but it has to be very massively discounted for me to be buying these kind of things. And I'm not sure if that's gonna happen. So basically, the way I would want to pick my altcoins is that I'm buying something that is gonna have a narrative or had good price action before the nuke, or something that I just personally like. Right? I think that's a little bit underrated as well. Like some people are just like completely ignoring that, and some people are doing it way too much. They just buy shit because they like it, no matter how bad it looks. I think it has to be a little bit of a mixture, right? Like if you like a project for a reason and you think it's good, and the price action is just a tiny bit worse than something else, might as well buy the one that you're gonna be comfortable holding, right? Where you're like, I like this thing. If it goes down 5%, I can stomach that. And whereas the other one, you think is complete and utter dog shit. If it's gonna go down 2%, you're gonna dump the shit and then not profit from an upswing. So yeah, but that's kind of how I look at it.
Sure.
Just I think generally like the stuff that has been outperforming is probably going to continue outperforming. That's probably the wisest bet, but that's not necessarily what I'm going to do. I'm going to look at some of the narrative plays that I think could come around in the later stages of the cycle, because I think if my pullback plays out, it's going to take a little bit, and the next push might be the last one. As in, like, let's say we pull back to 45, 50K. I could see it push towards like 100K, and that'd be the end of the cycle. And I could see that happen in quite a straight line. So I want to be positioning for kind of like end of cycle things more so than others. So yeah,
makes sense. Well, there you go. Also, even if this show is wrong about altcoins forever until the end of time, we have that one Altcoin Thursday episode I keep going back to because that was actually quite good.
Yeah.
Was it precise? Did we make a shit ton of money on it? Those are questions for which we plead the fifth. But I mean, it's a good show. The show is there. I generally agree with all of that. You could also just not plan in advance. I mean, this sounds weird, but you don't have to necessarily have a plan for which altcoins to buy where at what discounted levels. If you think BTC is done, like if you're correct and it dumps and it takes longer, etc., and then you're like, okay, now's the time to get into altcoins, you could always do like a 1, 3, 7 day look back on the stuff that's been strong, right, or stronger than the weak stuff, and then just build a portfolio from there based on like fastest horse type of thing. I don't think you'll miss out on too much. Because at the very least, even if you don't get the strongest coins, just using that methodology, the odds of you longing the weakest stuff is pretty damn low, right? And I think as long as you avoid that, that's okay. And then obviously the stuff you mentioned about like mega liquidations, mega discounted stuff, purely based on market microstructure, those are more likely to be in the gift category than not as well. Fantastic. I did want to go over positioning very quickly. So funding has been a very curious one. Again, you know how I feel about funding analysis done on crypto Twitter.
Yes.
And I've spent like an inordinate amount. Again, no, I'm no expert, but like I like to think I have a decent grasp of this kind of stuff compared to maybe like newer market participants. Maybe that's not being charitable enough, but whatever. I'd rather stick to the more humble articulation. And it's been very interesting to see like funding got squashed on this, like during the course of this price action, right? And that's been for BTC especially, also for some altcoins. Now, part of the reason that there's been some weird signaling going on around the funding rates and resets, etc., is that it's not necessarily that there've been a particularly outsized or large amount of perp liquidations. If anything, what we've seen under the hood is that these shallow dips, where there is an element of open interest wipe, they get bid back up so aggressively and so quickly that even if price doesn't come close to making a higher high, open interest just gets added like a motherfucker on the bounce. And I think a decent amount of that is long based, simply because of how the market's been conditioned, right? You basically buy any shallow pullback and you've been rewarded. And I think open interest more or less reflects that dynamic. The reason funding's been squashed to that extent, it's tempting to make the argument that, oh, well, that's because like the perp is getting hammered, for example, and that closes the gap between the index price and the perp price. So the perps are getting sold. If there's a big difference between the index and the perp, funding's going to be greater. If perp starts getting hammered, well, then funding will come down, for example, from being so positive to less positive. Part of the reason that I think that analysis is incomplete is it's actually spot that's been selling a lot recently. And the most obvious way to see that is twofold. One is you can just look at Coinbase trading relative to other venues, especially during the US session. And the second is the fact that while perps have sort of come down a lot in terms of premiums and funding, quarterlies haven't really flinched. Like Binance is still up at 25% annualized based on the quarterlies, and OKX, etc., roughly in the same place. So I think arguments that rely on, oh, well, it's just perps getting really horny and shorting, and that's why the funding rate has come down and premiums have come down, I personally don't think that's entirely accurate, because you're missing out on the dynamic that the way that basis can get squashed isn't just by perps closing or shorting or whatever else, but a lot of the time this can happen as a function of spot actually selling more aggressively and taking the lead on that front, and then perps get pushed down almost as a byproduct of spot selling. But you have to look at sort of not just overall funding rates, but also premium by venue, in my view at least. And what we've seen recently is Coinbase trading below a lot of perp and spot exchanges, which is quite different to what we had previously. Now, is that a big deal? Is that like the end of the world, a mega indicator? I don't think so. I just think it's useful context to be aware of if there are changes in the premiums in the market, kind of where, who's the instigator? Where's it coming from? And I think it's at least useful to be aware that while funding looks to be reset / squashed, and that is a material change, the quarterlies are still jacked up. And a lot of that weakness and that basis closing has come from spot selling as opposed to perps shorting. And I think that's at least a semi-material distinction, Maybe I'm completely wrong, but I don't think so. That said, if we look at the funding APR heat map on Velo, for example, remember that when they had to add colors to this shit? Because it basically went from like, oh, everything was yellow, okay, we're going to add orange, and now we have to add red. That has certainly calmed down a little bit. So it means if you want to get long, or even for short to medium term trading, at the very least, it's not going to be particularly expensive to do so. And the other point I will make is that overall global open interest hasn't really come down that much. It really hasn't. We made like historical new highs, and then it's just moved down a little. But if someone is making the argument at this point for, hey, look, there's been a mega wipeout leverage reset, I don't think the data necessarily supports that. The best argument you can make in favor of that is premiums on perps, but again, I think that's an incomplete argument based on the reason for that premium closing being more spot led than perp led. And then if you look at open interest as a whole, I think you'd be hard pressed to make an argument for a mega wipeout deleveraging. I don't know what you think about any of that, or even if you give a shit.
No, I pretty much 100% agree. So
thank God. Great. Don, news. Should we do some quick ones?
Yep.
Any other notes before this market goes to 100K tomorrow and all the comments are just calling for your head?
No, I think we pretty much said everything that needed to be said.
Fantastic. For some reason, all of my news articles have been deleted, which is really nice. I'm scared to click on my other tabs to see where they are. Did I put them in my leisure tab? But do I even want to click that?
Probably not.
I did. I clicked it and they're not there. And now my perverted tastes have been exposed. Well, we'll do at least one, right? So this is the coin. I've got one saved here for some reason. It's from Lupify on Twitter. Have you seen this BOME coin?
Oh, for some reason. Yeah, I've seen 2 or 3 people mention it.
So it's gone from 1 million market cap to 1 billion in 48 hours. And now it's listed on Binance and Bybit, I think spot and perps.
Oh, shit.
And it's like a Pepe thing. It's like a green frog, Pepe symbol for the coin. I think this might be the fastest speed run maybe ever to these valuations.
What the fuck? That's insane.
And it's pretty fucking extraordinary. Does this kind of stuff affect you at all? Because there was another one where some guy, we had like another Ben ETH equivalent. Some guy posted a Solana address for a pre-sale thing, and I think he raised 10 million in the space of a couple of days in Solana. So that kind of stuff has been happening. Do you care at all, or do you think it's a sign of froth? Is it just bull cycle things? Because again, that's also one of the ongoing discussions on crypto Twitter. That yes, okay, in the past this may have been froth, but you've basically just forgotten, your frame of reference is wrong. You've forgotten what the craze of 2021 was like. So this is frothy relative to 2023, 2022, etc. But in 2021 terms or crypto bull market terms, it's not. Do you have any sympathy for that argument?
That sounds supremely copy, not gonna lie. But I mean, it's somewhat true, right? Like, we are in a new paradigm-ish. With the ETF kind of supporting Bitcoin, and with Bitcoin is supported, the froth in altcoins just kind of goes longer and longer until it gets too much, and then it nukes, right? Like, generally, this is kind of new dynamic now that we have, where, like, yeah, if Bitcoin cannot nuke the altcoin froth can get even bigger than it has been in the past, which is a little bit scary to think about because it got so big last cycle that you have pretty much all the celebrities and everything involved, right? Like, how big is this gonna get? I think the answer to that is humongously big, like so stupidly big that people might actually, or like countries might actually ban Bitcoin, or like not necessarily Bitcoin, but generally crypto as a whole, because it gets too big. We've seen something of the sort in South Korea before, right? Where people got so massively wrecked that they were, I think, I might be misremembering, but I'm pretty sure the Korean government was like, okay, we need to actually think about ways to reel this in because all our young people are losing all their money. And that was last cycle, right? This cycle is even bigger than the one before. So who the fuck knows where that's gonna end? But until it ends, that's gonna be very fun, right? But I think, to the question, I think it is a sign of froth. I think it is a sign of stupidity kind of returning, or like just generally taking over. But I don't necessarily think it's a market indicator of sorts, right? Every time someone posts their Solana or ETH address on Twitter for a new meme coin, the market is gonna go down 50%. Like, that just seems a little bit silly, right? Like, that's not how it is. So
Yeah,
I don't think there's much to be taken from these other than that it's very fucking stupid, and that stupidity is back. But you shouldn't be taking it as just like, okay, this happened again, so I'm gonna short. There should be better reasons for shorting a market that is this strong. And there are better reasons.
Like the ones you presented. Yeah, exactly.
In my opinion, anyway. Obviously, it's all kind of subjective, right? Your reasons for being bearish or bullish can be very different from mine. It can be as valid.
Yeah, and your time horizons may vary, your risk appetite may vary, the entries you don't have or do have already, that affects it, your targets and all of this type of shit. Make a massive difference. Just one dude sharing his opinions and another dude asking him for opinions because he doesn't know any better. The other piece of news that I had was that Polymarket seems to be pretty negative sentiment in terms of the likelihood of ETH ETF being approved, at least by the sort of end of May. The Bloomberg brothers haven't come out with their formal predictions yet, but they've sort of been bear posting it a little bit, certainly compared to BTC. Do you have any views on ETH ETF likelihood? And in general, do you think ETH ETF kind of needs to happen to bail out ETH BTC? Can it do well without that?
Bitcoin can do well without it, yeah. I think...
But can ETH do well without it?
Oh, no. It depends. I think ETH's just going to go up the moment it gets more likely, but I don't think the ETH ETF is going to come anytime soon. It's something I've been saying for quite a while now, because it's just so much more complicated than Bitcoin, right? Like, Bitcoin was just boring piece of tech for the longest time. It's changed a little bit now with ordinals and stuff, where people are actually using Bitcoin. But before then, like, barely anyone used it. Most people stored their Bitcoin on exchanges. They don't really give a fuck. Or would they would put it on a wallet and just keep it for 5 years, right? So it's relatively simple. ETH in comparison, very much not. So I think that would take longer. It's easier to kind of just give it a no, like, be like, hey, this is, or like at least give it delays, right? Like a lot of shit has happened on ETH before. A lot of hacks, a lot of whatever.
It's also got like staking and native yield, and
exactly.
It's like, oh god.
And the whole, and I mean, how do you kind of manage all of that, right? Like anyone that would hold ETH in an ETF wouldn't be staking it, and then you can, it's a fucking headache.
And that has a massive implication in terms of like actual returns and performance, right?
I mean,
like,
it's great for everyone that isn't holding the ETF.
Yeah,
like if we actually got an ETH ETF and everyone that has the ETF couldn't stake it, that'd be fucking great for all the ETH holders, native ETH holders. But yeah, so I don't think that's gonna come anytime soon. Which might explain the shit price action on ETH, but I think it's gonna come eventually, right? So it is still the most, in my mind. I'm not sure if they might just bring a fucking Litecoin ETF before ETH just because it's less complicated. That'd be fucking hilarious. Litecoin or Bitcoin Cash, because that's the ones the boomers know, like every time. But it's still like one of the most likely ones to get an ETF, and it's also something that at least is not shit like Litecoin and Bitcoin Cash, right? So I think it's a decent play. It's just a question of how far in the future is it actually going to pay off? And that one I don't know.
And like, who's the SEC chair at that point? Do we need all the lawsuits to like drag the SEC into approval, or are they going to be more crypto friendly? A bunch of stuff to look forward to.
Oh yeah, especially if it's like, let's say the cycle plays out, right? Bitcoin rips towards 100K, altcoins go completely nuts, and then half of America's youth lose all their money, because that's just how it's gonna be, right? like one thing that I think no one should be forgetting is that the end of these, like at the end of all of it, is major suffering for people that don't know what the fuck they're doing, right? Like every single crypto cycle has brought death and destruction to non-crypto natives, right? And then the next cycle, those non-crypto natives are crypto natives, and they take advantage of the next, right? So, and given this would be the biggest cycle, that's going to be the end of it. And I think at this point, it's going to be so big that we're actually going to have to deal with regulations of just generally crypto. And then it's going to be interesting to see if you're going to get an ETH launch, like an ETH ETF launch, into that negativity, because I think there's going to be a lot of negativity floating around at that point.
Yeah, I mean, if the timelines converge, that would just act as ammo, right? It's like, look, we approved the Bitcoin ETF, and now Bitcoin is down whatever amount from the high, for example. Or
yes, like Bitcoin traded to 150K, and now it's down 50%. 50%. But God. That's kind of how it works, right? So if this bubble like this, especially the altcoin bubble, gets too big, it pops at the end of it. Always has, always will, I think. You're gonna see valuations go down 90-95%, and then that's not gonna sit well with people that are having to make a decision whether they're to approve an ETH ETF or not, especially given people trade altcoins on chain, partially on ETH, not necessarily that much these days because it's so expensive, but still. So we'll see.
Just the North Korean argument over and over again, at that point.
yeah.
So Don, you started with Doom and you ended with Doom. Do you have any positive messages to send us off with? Maybe about your active trading return, or just something nice? I don't know, look outside. Are there nice trees and birds chirping or some shit? I'll take anything at this point.
I mean, yeah, the outside world is nice. And the good thing is if it nukes massively, you can buy it cheap.
Fantastic.
So that's great.
Well, that wraps it up for Casual Friday. Before you click off, make sure to like this video and subscribe to the channel. It's very much appreciated. Thank you to Woo for supporting the show. If you want to look into a centralized exchange, their links are available below in the description box. As always, counterparty risk stuff. The whole point of leverage is that you don't expose your entire crypto portfolio and have it in one place, but you can still trade. If that makes sense, check them out. If not, don't. It's your life. Hope you all have a wonderful weekend, and we'll see you next week. Don, you have to say bye-bye. You know how this works.
Bye-bye.
There you go. Bye-bye.
Fair enough.